Have you ever wondered how the MACD indicator works? Well, let's dive into it. The MACD, short for Moving Average Convergence Divergence, is a tool often used by traders to pinpoint potential buying and selling opportunities. Intriguing, right? At the heart of the MACD indicator are two lines, the MACD line itself and the signal line. They dance together on the chart, and their intersections are key signals to watch. But there's more. The MACD also features a histogram, a visual representation of the difference between the MACD line and the signal line. Its color changes are significant too. When the MACD crosses above the signal line, it turns green. Conversely, it turns red when it crosses below the signal line. The intensity of the colors in the histogram also provides valuable insights about buying and selling momentum. Understanding the MACD indicator can be a game changer for your trading strategies. Now you might be thinking, how do I use the MACD indicator? Well, sit tight because the MACD indicator isn't as complex as it may initially appear. Let's break it down step by step. First, you need to understand the MACD line and the signal line. These are the two key lines that you need to focus on within the MACD indicator. The MACD line is responsive to the immediate changes in the price, while the signal line, that constant yellow line, is slower and more stable. Now here's the interesting part. When the MACD line crosses above the signal line, it's a signal to buy. This crossing is represented by a green bar in the histogram. Why? Because it indicates that the short-term momentum is rising faster than the long-term momentum, suggesting an upward trend. On the other hand, when the MACD line crosses below the signal line, it's a signal to sell. This crossing is represented by a red bar in the histogram. It reflects that the short-term momentum is falling faster than the long-term momentum, suggesting a downward trend. But that's not all. The histogram, those bars you see, play a significant role in visualizing the momentum of buying and selling. The dark green bars in the histogram show increasing buying momentum. As the green gets lighter, the buying momentum is decreasing. Similarly, the dark red bars represent increasing selling momentum. As the red gets lighter, the selling momentum is decreasing. So in a nutshell, you go long. That is, you buy when the MACD line crosses above the signal line and it's below zero. And you go short or sell when the MACD line crosses below the signal line and it's above zero. And there you have it. That's the MACD indicator for you. Remember, it's not about reading a single signal but understanding the overall picture that the MACD indicator paints. It's about capturing the trend and momentum of the market. By closely monitoring these signals, you can make informed trading decisions. Happy trading, folks! So to summarize, what have we learned about the MACD indicator? The MACD, or Moving Average Convergence Divergence, is a beautiful, easy-to-understand tool that's been a reliable companion for many traders over the years. It's composed of two lines, the MACD line and the signal line. When the MACD line crosses above the signal line, it turns green, signaling a potential buying opportunity. Conversely, when it dips below the signal line, it turns red, indicating a possible selling point. The MACD also features a histogram that visually represents the momentum of buying or selling. Dark green signifies increasing buying momentum, and as this momentum decreases, the green lightens. Similarly, dark red shows increasing selling momentum, with the red fading as this momentum lessens. Using this indicator, going long when the MACD is less than zero and crosses above the signal line, and going short when the MACD is greater than zero and crosses below the signal line can be a powerful strategy. Mastering the MACD indicator can significantly enhance your trading strategy. Happy trading!